It is inevitable that at some point a successful online education business owner starts to think to themselves, should I sell my business? We hear stories of people that sell their businesses for massive multiples and make tons and tons of money. And we start to think, maybe that's something I should do as well. But most of the time when people are thinking along these lines, they do not really understand what selling an online business actually involves, what it actually means, if it's even possible, who might buy it, what you might likely get for it. And so as a result, we spend a lot of time living in fantasy land. So in this video, I'm going to break down what it would actually take to sell an online education business so that you can just start to contend with it in a realistic way and understand what you're getting yourself into. In case you don't know me, my name's Olly Richards. I'm the founder of StoryLearning.com. It's a multi-million-dollar online education business. I'm also the author of many books. We sold over 1.5 million copies. And these days I work as a mentor and advisor to other online education businesses. So I want you to imagine that we have a creator, and this creator has a core product. And let's say that this core product is doing around $2 million in sales. I have a number of friends who are in this position. Very successful business. A lot of this is profit because they have a lean team. So it's the creator plus a very established business, and they are living a great life. But sooner or later, they start to think, well, I'm making 2 million with this business. Maybe I could sell it for 10. And then that would be cool because I wouldn't have to work again and I could go off and do these other things. In order to answer this question, we have to start by understanding exactly what it is that you have on your hands and why this might not be, on the face of it, so appealing to a potential buyer. So most people that find themselves in these situations, first of all, have a personal brand, which means that the business is tied to their name. Now, this doesn't necessarily have to be a huge problem when it comes to a sale, but it's certainly a very big red flag because any potential buyer is going to be asking, hey, what's going to happen once I remove the personal brand from the brand and I'm left with the resulting business? Is it going to be able to survive? So we have a personal brand. Most of the time we also have organic traffic, which means we are getting traffic from algorithm-based sources like YouTube, like blogs, like podcasts. We often have a very lean team, and this is great for a creator type business because it means we can keep a lot of the profit. Not too much of it goes out the door in costs. Essentially what we're able to do is leverage media to get tons and tons of traffic, and then we're able to monetize it effectively, run it with a lean team, and that's why these businesses tend to be so good. And then more often than not always, but often it's the case that you rely on product launches to generate revenue. Now there are exceptions. There are cohort-based businesses which are perhaps slightly different. There are membership sites, but many of the businesses that I see make a lot of their money through product launches. This is important to understand because most education businesses look a little bit like this, and this is not what most buyers are looking for. So let's have a look at what most buyers are going to be looking for. So someone who is going to buy your business needs to know when they buy your business, it will continue to go from strength to strength after they acquire it. Specifically, they don't want any key man risk. Key man risk is the idea that the entire business is over-reliant on any one person. Often that is the founder, but it could also be the head of operations. It could also be someone else who's involved in expertly delivering a product, but they're looking for key man risk. This is a big red flashing warning sign because it creates a single point of failure. This key person leaves, the business now cannot function. They also want a number of customer acquisition channels, and this is a particularly big deal for businesses that run on organic traffic, because if you are a podcaster, for example, all of your traffic comes from a podcast. Well, that's great, but again, what happens if you leave and the podcast stops working? What happens if algorithms change? You need to know that we could take a big blow and lose one of our customer acquisition sources and still have a couple of others left. So buyers need to know that you have multiple places to get customers from. That's the sign of a strong business. A buyer also wants a management team because most serious buyers do not want to go in and start to run that business themselves. They want to acquire an asset that they can get a return on. It needs to be managed by someone. So do you have a management team? And a lot of creative businesses don't, or they have one that's kind of half-baked but still relies on the lead creator for a lot of the marketing, for example. They also ideally want recurring revenue, and this is a problem if your business is reliant on product launches because, again, it just creates a lot of pressure on single events. Most people acquiring businesses want to know that revenue is coming in month after month after month, whatever happens. And so for those of us who do not have pure recurring revenue in our business, or those of us who are reliant on product launches, need to think quite carefully about that. So you can see here how fundamentally a creator type business really is quite a fragile business in many senses. It's very, very valuable in the hands of the creator, but it's not at all attractive to a potential buyer because all the things that they need in order to make the business stable so that they can run it hands off do not exist. This is why a lot of the time these creative businesses are deemed as having really not much value, and the only way to really add significant value to them is with software, because software is that thing that can scale beyond any one individual. If we want to sell the thing that we have, we need to move from this to this. So now let's rewind and go back to the original situation. So we are a creative business with a product that's doing, say, 2 million in revenue. And we think, right, well, should we sell or not? Let's say that this creative business is running at 50% margins, and so at the end of the day, this person actually keeps 1 million in net profit, right? So this is the true value to the owner of this business. There's 2 million in revenue. On 50% profit, they keep 1 million. So now you come to sell and you think, if I were going to sell this business, what would I need to sell it for in order to make sense for me? So you might think to yourself, right, well, I could sell this business for 5 million. Does that make sense to me? Would I sell this business in order to have 5 years of profit in the bank right now? A lot of people would look at that and think, wow, it's a big number, but is it not worth me just kind of keeping it myself? And so you start to think, well, maybe I should sell it for 8 million or 10 million, because remember, you've got taxes to pay on the sale. You've got broker fees to pay on the sale. So for example, if you wanted to end up with 5 million net of everything after taxes, after brokerage fees, you most likely have to sell for 6.5 million. So now the goal is, right, we've got to take our business that's doing 2 million in revenue and we need to somehow engineer it so that we can sell it for the sum of 6.5 million. And that is only if you look at that and think that it's worth your while to get that money in exchange for losing the business. Also bearing in mind that most often when you sell the business, it's not like you just get this cash in one go. You might get 50% of it in cash and the rest of it has to be earned out. So there's risk attached with this as well. Now, how do you know what the sale price of a business would be? Businesses, digital businesses, typically sell for somewhere between 3 times to 5 times EBITDA or net profit. What multiple exactly you get depends on a number of factors, but in order to get those higher ranges, that's when you need things like this. That's when you need to have no key man risk. You need to have multiple ways of acquiring customers. You need to have a management team in place, recurring revenue, and ideally software. The more that you get here, the higher multiples that you can get, potentially even higher than 5. You can even get 6, 7, 8x in certain circumstances if all of this stuff is very, very strong. Okay? But for the most part, education businesses that sell are for these multiples. So now let's say that we have a kind of real low-end goal of selling for 6.5 million, because we know that after tax and fees, we might end up with, say, 5 million. Now, at a 3x multiple, that would mean that we needed to be doing, the business needs to be doing just over 2 million in net profit in order to sell for a 3x multiple and sell for 6.5 million. Or if we were lucky enough to sell for a 5x multiple, that means we would need to be doing 1.3 million in EBITDA, net profit, in order to get to this 6.5 million valuation. All right, so this is the task that we've got in a nutshell. Okay, our business is doing 2 million in top line revenue, and we know that we are keeping 1 million of that currently. So we've got to find a way to get from 1 million in net profit to 1.3 million in net profit. And you might say, well, that's on the face of it, that's not much of a jump, but we're almost there, right? This means that we can sell the business now for almost this 5x multiple and get there. We can, except you're not going to get that because you have too many of the limitations that we spoke about up here. You're running a personal brand. The business relies on you. The traffic's organic. You don't have much of a management team in place. The business is not set up to sell. So we would need to put all of these things in place first. So what's that going to cost? Well, see, currently we are running at a 50% margin with our lean team, right? Except now, what do we have to do? Now we need to have 2 or 3 customer acquisition channels. And this means that we need to start most likely using paid ads, because the antidote to unreliable organic traffic is paid acquisition. So we probably need to run paid ads, and this is going to be very expensive to figure out, and then our margins are going to shrink on the back of it. We also need to have a management team in place. So rather than your one person who currently manages everything, we need to have someone who is going to manage marketing, someone who's going to manage finance, someone who's going to manage operations, and maybe someone sitting above them, a CEO running the company as well. And that is now, those people there are going to cost you at least, say, $750K to $1 million to get a really good team doing this. And then we have to find a way also to change the business model slightly so that we now have some recurring revenue in there. So what all of this is going to mean is on our 2 million of revenue and our 1 million of profit, by the time we start to add new customer acquisition channels, and so our margins start to drop, and then we hire in the people who are going to run this new version of the business, what's happening now is that our margins are going to go from 50% down to something like 20%, which means that on 2 million of revenue, we're now making 400K of profit. Okay. So now what we've got to do is we've got to get this 400K of profit up to the 1.3 million of profit that we need in order to sell for 5x profit to get to that 6.5 million. Right? And now the true size and scale of the task really becomes apparent, because you've got to get all of these things in place. You've got to make everything work. And then in order to be able to sell, you need to be able to demonstrate at least 2 years of accounts showing that you're making money at that level. It can't just be what you made last month. Buyers want to see at least 2 years of really solid evidence that you're able to generate this kind of profit without you being involved. And there's more, because at this level of profit, just like about 1.3 million, most private equity buyers are not going to be interested. Private equity kicks in at a slightly higher level than this, which means what we really need, even though mathematically this works out, this 1.3 million, really, we want this to be more like $2 to $3 million in profit in order to start to get access to the bigger private equity buyers. And this is why often when you see people who acquire companies, they'll often say that they want you to be doing at least 2 or 3 million in profit. And that's the reason, because a business at this size, typically, it can be very profitable for the owner, but it just isn't that stable. Too much can go wrong. There's not much wiggle room. But when you've got this level of profit right here, well, now if you need to, you can buy your way out of trouble. You can spend a lot more money on customer acquisition. You can bring in some heavy hitters to solve problems. And if you need to, then you can also sell the business on to other buyers, because at this level, you've just got a wider pool of people open to you. So despite all of this, what you really need to do is to get the business back up to this level. Okay? Now, let's just frame the size of the task here, right? You've got a business that's been doing really well for you for a long time. It's super profitable for you, but you don't really have much of the stuff in place to make it a solid, reliable business. And so you've got to put all of these things in place, and that's going to take a couple of years to do. You've also got to invest a huge amount of money in building capabilities to run paid ads, to put the management team in place, to bring someone else in to be the face of your business, to absorb the decline in revenue whilst you figure out the business model in order to get recurring revenue in there. So in order to even approach this, you've got to be prepared to devote at least a couple of years to it, and probably at least $1 to $2 million that you're prepared to lose in the figuring out of the new model. And then you've got to make sure that that works, and then you've got to ride it out for a couple more years in order to really show that you've got that stable revenue, and you can demonstrate that you're growing year on year as well. Right? Now, this is why most businesses that will reach 2 to 3 million in profit are most likely doing 10 million in top line revenue. And this is why this is a number that gets thrown around a lot, because it's kind of shorthand for saying a business that reaches this level of revenue typically has enough profit and all of the features that we need in a strong and stable business to actually be an attractive proposition for the buyer. And then if you manage to do this, well, you might find that then let's say 2 million in profit, and let's say you get your 5x multiple, then you can sell the business for around 10 million. And that is the kind of exit that a lot of entrepreneurs would be pretty proud of, especially if you are sole equity owner. Now, different people react to this in different ways. A lot of alpha entrepreneurs will look at this and they'll say, this is the only possible time. Anything short of this is a complete failure. In fact, why go for 10 when we can go for 20, etc., etc. But I think a lot of educators, a lot of people who have kind of stumbled into online business without really knowing what they were getting themselves into, and I'm one of those people, would look at that and think, you know what, this is going to be 2, 3, 4 years of really brutal work. I'm also incurring a lot of risk here because of the amount of money I'm investing. And it may or may not pay off. Statistically, a tiny percentage of businesses ever get here. And so I'm now voluntarily putting myself in a situation where I'm standing at the roulette table, putting everything on red and hoping that it works. And do I, in my life, actually want to be putting myself in positions where I'm standing at that roulette table? And for a lot of people, the answer is no, because the alternative to all of this is just to say, you know what? I've already won the lottery here, and if I just keep the business, keep doing what I'm doing, make it efficient, make it run more smoothly, make it more profitable, then I can just keep going, doing the thing that I'm doing that gives me this great lifestyle. And if I keep going at this rate, well, sooner or later, I'm going to end up with more money than I know what to do with anyway. So does this not just represent a better life across the board, especially if there's other things I want to be doing? I want to be going out and playing tennis or spending time with my kids or whatever. If you find all this interesting, you might like my free case study. It's called Anatomy of a $10 Million Online Education Business. It's about 118 pages and it breaks down exactly how my online business works in exhaustive detail. I'll put a link in the description. And if you like stuff like this, well, you're most definitely going to like this video right here, which tells you a bunch of really, really interesting stuff.